Dollar is dropping. Bitcoin is dropping. Ether has broken its support. The entire crypto market just looks like it's bleeding. What on earth is really happening here in the crypto market? While you look through a lot of these assets, you kind of get an easy understanding that a set of these assets are still in green for the week. Some of them barely holding on to the green, a bit above, a bit below. But then you can see the other side of the equation, which is kind of a bit in red. So whether that's in the first 100, the next 100, you can arguably see this. Why is that so important? Because some of these assets are still holding on to the local level of supports, whether that's a micro level of support, whether that's a macro or short to medium term level of supports. Bitcoin is holding on to that level of support right now. XRP is doing that, but say Ether has broken that to the downside. So when you do zoom out on the same Ether, you get to see, yeah, the short-term structure, the medium-term structure, it's all invalidated, but the macro structure is still valid. As of now, Ether is still respecting this trend line, which means the retest possibility we discussed earlier is kind of playing out, but the bottom can be 2160, 2200. That can still be in picture. We argued several times that Ether would come to 2900 or close to that and then go back down towards 2200. Right now, that's playing out, and the majority would be shaken emotionally here. Why? Because they're not looking for the price action to do this before a bounce, to do this before a bounce. So most likely to do this before a big bounce. So the assets which are holding on to the trend line, like XRP, they have higher odds of bouncing much higher when the price action starts to reverse. So we would be looking at welcome to the Scientific Investor family, where the normal retail guys get to learn how to become the next top 10% of this world. Arguably, we were giving you the thought process of watch, there is something evolving. The process of the whales, which is a trap, is playing out. I was expecting 61 to 62, but Bitcoin right now stands at 59. The long wicks, the standard deviations, they always come into the picture. That's one of the reasons why you need to combine the macro with the micro. Here you are watching Bitcoin on a daily, and you see the short-term trend line is still valid. Here you are looking at XRP on a daily, still the short-term trend line and the micro trend lines are valid. You take XRP onto a 3-day, or on a weekly. With the weekly close, we argued the odds for XRP looks like it needs to correct back down. Correct like what? Like this, at least, to test the first level of support zone. Now we're kind of observing the fact that the price is doing that. In fact, the price is trying to reverse accordingly. One of the reasons for that is the resistance was strong. Price was unable to break the resistance to the upside. So now you're watching the price trying to attract more capital, price trying to get more buyers by showing that I'm at a support buy. So the supply and demand equation should be on from 0.49, then 0.4. These are the two major ranges which we will watch. But keep in mind, this also plays out with the macro trend line support. This has been there all the way from 2022, so we cannot neglect that. And it argues 0.48 to 0.49 is going to be that key range in XRP. XRP coming down to 0.49 and bouncing off still looks like a good odds in the market. And when we say still, remember we were putting out this thought process of which to look at, 0.49 or 0.43. And that was like a couple of weeks ago when the price was still higher. But now the market shows you the SI family has been guided well enough into this. So the thought process of if you are looking to buy more XRP, it should be here. And if you are looking to buy more altcoins, it should be around 60, 61. Now we entered the territory of 59, which means a lot of these altcoins are right now at that range. It is coming back into the retest of a micro breakout. It is also coming into the retest of a medium term breakout. So the breakouts and retests are common in the picture. Now you zoom out in this particular asset. So you're like, okay, fine. The price did not drop to the downside. So you take a 3-day chart, it will be clear. However, the RSI did drop to the downside. It starts to highlight the fact that there is a possibility that you're developing hidden bullish divergence. So now you zoom in. Okay, I have the idea. And you're looking at 3 candles to the upside and 5 candles to the downside. So buyers looks like they are becoming strong at a point. So you are now interested in looking at that particular asset and its support ranges. The previous resistance turned into the new level of support. So if you're looking at a retest, now your argument is, yeah, the price is back at that retest. I was looking for like 0.89, but as informed in the group, we were looking for 0.89, but the price is now at 0.877, close to 0.88, which means whenever the price drops, it kind of drops with the entire market sentiment with a long wick to the downside. So this is your trend line. So you're looking at OM on a 12-hour or a daily, you'll get to see this trend line, which was there all the way from early August. So for last 1 month, you're watching the RSI climbing up while the price was still choppy. The price was still going down. Now the price is trying to make a higher low. What if this asset is trying to do somewhat something like this? If that's so, that means what you're watching is the wave 1 structure like this. Some of these assets tend to do that, right? It creates a double bottom structure with the wave 1, whereas both of them, whether that's the case or the inverse head and shoulder is the case, all of them would look absolutely bullish. That's a bullish reversal sign, whether that's a double bottom with a bullish divergence or whether that's an inverse head and shoulder. So what are you watching for? Say you don't have any expert help in the market. Look for reversal signs. Look for the market showing you data pointing like, okay, I'm making this pattern. It cannot be textbook pattern all the time, but it can be arguably a bullish divergence developing. So the higher the time frame on which you see all these play out, the odds are sky high. Now, remember, all of these assets, when you go on a macro, also show you something. What? The price has been going higher and the RSI has been going lower. So you do have a negative divergence. So the get out point on all of these assets would remain like this. If that support is broken, done. The price is going much lower. It is going towards a range which we haven't seen for a while. So this asset can get obliterated, which is like a 90% downside if that plays out. But for the retail to enter into such a carnage, whales would like to do something, right? So I'm like, okay, they are trying to do something. What is that? And that is where we come with a zoomed in picture. So yes, on a macro, it does look like it is a huge trap. So in a month or two, we may see the price traveling to the downside while a lot of other assets going up. Now put that into perspective. On a micro, they may show this bouncing back, but then it may directly come back down, dropping heavily. So if you're trading these assets based on the short-term picture, understand, okay, the short-term picture, if it remains ABC rather than making a 1, 2, 3 structure like this, now you understand, okay, this is the reversal point, it's an ABC, it's coming back down like this. And if breaks that trend line, that's a warning signal to get out, because from there, the price can drop much lower. So it depends on which asset you are looking at and which segment of that asset is in. Say, if that asset belongs to a segment like payments, it's kind of strong. I should argue that. It's kind of strong. Whether you take in XRP, whether you take in XLM, you are kind of watching that they're not breaking further to the downside. Rather, they're testing a resistance on the RSI level, which is bullish. You look at the trend and it shows you XLM had a bull flag. It broke that to the upside. It is making a continuation pattern, a rectangle. So can that be a bull flag which breaks to the upside? We cannot neglect that possibility. So while you look for these, you understand, okay, this segment is not getting obliterated. Now, yeah, the XLM, XRP, they are like the large cap in payments. So if you want to look for the medium cap, then you'll actually have to go on, find, say, XDC on an exchange which gives you longer price history, and then look for what it's doing. Now, XDC is a medium cap asset, which already showed you there was a change in the price structure. You kind of saw the price deviating like this and then coming back down. But now, while it is coming back down, there is a difference. What is that? The momentum to the downside is fading. The price action is still forming a pattern here, which looks like a falling wedge. So whenever the price is in a falling wedge, it shows you bullish reversal can be expected. Now there are some exchanges which would actually give you the price of this asset from a long term. Now, yeah, we were talking about the exact same thing. Looking at the structure, we need a breakout from this pattern. So the pattern is still kind of playing out. You're still in choppy waters. You're still here. If you break to the upside, that's all it matters. But the time taken for such a consolidation, remember, after the 1, the 2, and the 3 is too long. It's already been a year or more while we are consolidating. So the micro, the medium, all of them shows you this asset has already retraced back to what? A macro support level, which has been valid all the way from 2021. While you were going up, this was a support. So payments, whether it's large cap or medium cap, is starting to show you one thing. Now we are close to a support level and we are trying to make a reversal. The long wick at that bottom kind of argues that as a point. And it's a weekly chart. You go zooming in on a 3-day chart and XDC shows you something. Don't forget this. These are key points. Price is going down, whereas the RSI is showing you the fact that it is not going down, rather it is going up while the price is going down. That's a bullish divergence. So at a support, they're starting to show you they're forming bullish divergence. Now you look at their MACD because it matters. Which direction are you traveling to? Are you traveling to the downside or to the upside? And MACD argues, no, I'm traveling to the upside. Say you're not in payments and you're someone who loves smart contracts. You go on to the smart contract side of the equation. Now watch what they're doing. Watch how the divergence is playing out. Is it straight line or is it tilting to the upside? This gives you the direction which you are about to play out in next month or 2 or 3. You will watch the price action reversing. Why would I say that? Because history shows us that clearly whenever you get to see these confirmation, that's where the price goes back up. Last time you saw this, back in 2023, the price went up 200%. Then there was a minor correction and it went all the way up to 250%. Now that's in smart contracts. So now payments are showing you this. Smart contracts are showing you this. You have AI, you have gaming, you have a lot of different asset segment in crypto. And that's one of the reasons why we're saying we're going through that breakdown in the crypto assets, whether that's smart contracts, whether that's payments, whether that's AI, whether that's gaming. We're going to break it down to you guys in the Scientific Investor family so that you know which asset is doing what. And if you want all of that, use the link in the description below to reach there with 1,200 plus members taking benefit of it readily. If you think you received value for your time here in the Scientific Investor family, smash that like button for me. I'll meet you guys on the next video. Bye for now.